A lot of traders don't want to go to live because they've gotten bitten by the excitement of the sim game. And I'm just going to call it as it is. Most firms are not equipped to move traders to live properly that excite them about moving to live.
Trade, ask for a payout, and then be shocked when you're told that there was a behavior in your trading that didn't meet the requirements or expectations.
We were victims of that first.
My audience is always asking, why intraday?
Traders try to rush through the process. They try to get through the accounts, get as quick as possible, or pass an eval as quick as possible, or get to a payout account as quick as possible.
Hey there, speculators. Welcome back to the Futures Fanatic channel. Hey, I just finished up a great conversation with a friend and businessman that I've known for quite a while, Sean, and I think you're going to really enjoy the conversation. We focus mostly on the launch of his new prop shop called Prop Shop Trader, but also the parent company and TickBlaze, which is a platform that they own. We get into all those details in the interview. I think you're going to really like it, especially if you're in this future space or you want to learn more about prop trading and platforms and where things are going. Just wanted to let you know really quickly that if you're watching this video shortly after the time that I drop it on YouTube, that we are also doing a promotion in which we're going to give away 5 $50,000 Gladiator accounts, one per winner. And those are the direct to funding accounts. So that has about a $300 to $100 value at retail price. To enter, I'm going to leave the details down below. It's not that easy to do some of these promotions and things via YouTube. But the first thing you have to do is you do have to like the video. Then you have to be a subscriber to the Futures Fanatic channel. And then you're going to have to check the first pinned comment where I give instructions on a few other channels that you're going to have to subscribe to. Those include TickBlaze and, of course, Prop Shop Trader. Once you've done that, then you just have to leave a comment on this particular video. It can be anything like Prop Shop, and then you'll be entered to win. Now, there is an unfortunate caveat as we get to in the interview, which is that Prop Shop is not available even in the eval stage in certain European countries for regulatory reasons, and it sounds like, unfortunately, that won't be changing anytime soon. So if you are in most of Europe, probably you won't be able to enter. So there are timestamps down below. Basically, the message here is that the descriptions and the comments, the pinned comment, are going to be very feature rich. So if you want to participate in this promo and competition or giveaway, and if you want to have more information about the countries where it's supported and a bunch of other links that will be important to the conversation, please just check the description down below. All right, that's enough of the housekeeping. You're going to really enjoy this. Please try to watch all the way to the end. We cover a variety of different topics, and Sean is super knowledgeable. Although this company just launched recently, he's very, very knowledgeable about the space and has been at this a long time. Definitely a veteran in the space. That'll be it for this introduction. Enjoy the video. Thanks. Hey, Sean, welcome to the Futures Fanatic channel. It's been a while since we've spoken. Good to have you here.
Thanks, Rod. Appreciate being here.
Well, I will have said in the intro that we are not strangers. We know each other pretty well. We've been doing business for a while. Both of us have been around. You have a lot less gray in your beard than I do. But given all the responsibilities that you have that we'll talk about today, I imagine it will be coming. So let's just start out. Tell the group, I mean, anyone who's been in futures for a while is probably aware of you and some of the businesses you've been involved with. But give us a quick overview of what you're up to, how all these pieces fit together, and then we're going to talk mostly today about Prop Shop.
Sure. So thanks again, Rod, for being here, and all the viewers that follow you and your group and your community. It's great to be here. Essentially, it all started on the NeuroStreet side. Obviously, I'm the CEO of the NeuroStreet group. NeuroStreet's a portfolio of brands. We have software development companies, education brands. We did a Series A in 2023, and we acquired TickBlaze, knowing that we wanted to expand into the prop space. And basically, that's pretty much it in a nutshell. It's been a very long decade. We've been around since the beginning of the platform wave. I mean, it's been nothing short of busy and very successful, but it's been great. Yeah.
Cool. So we're going to get into how all of those things fit together. But first, I just want to point out NeuroStreet's primary business for a long time was indicators for NinjaTrader, right? So that on the software side, as well as some other software.
Yeah, we had education brands that have been rolled up into TickBlaze, and they're free for the platform users now. But obviously, the biggest expansion for us was the marketplace we built onto the back end of Ninja. We're probably the second biggest in the world. We've got about 130 products built on Ninja and TradingView. So at the end of the day, it's we're one of the largest algorithmic trading developers in the world, right? We've got about 40 automated systems built, and very, very large algorithmic community. So it's that was really where we got all of our development experience, and that's really where we built a big name for ourselves. Yeah.
Great. And for those that don't know, TickBlaze is your platform, right? So you're
Yes.
one, I think maybe if we call Project X, Top Step X, they might be the first that sort of was a prop firm with a platform or technology offering. You're the second, but doing a whole lot more. Can just give us a brief overview just of TickBlaze, and then we can talk about the third leg of this stool, which is the prop shop.
Sure. So TickBlaze was the big technology play for us. Like once you build an app company or a software development company selling indicators and algos, you can only grow so big before the next question is, are you going to be a broker? Or are you going to be a platform? Or are you going to be a prop firm, right? We knew that if we wanted to become a prop firm or a broker, we needed our own technology. And we could have gone down the same road that, Project X did, or any of these other platforms where we basically build white label integrations of TradingView. We went a different path, mainly just due to the fact that we wanted to have a much bigger technology infrastructure around us. And TickBlaze is our platform. It's a NeuroStreet brand. It's owned under the NeuroStreet umbrella, and it's really a really big tech stack. Like we don't just work in the retail space. We work with institutional quant funds, hedge funds, prop firms, brokers. So it's a pretty big operation. Yeah, and TickBlaze is really it's a technology stack that will be a major play for us in the future. Yes.
Great. And we'll probably spend a little bit more time on TickBlaze, but I'm pretty sure that we're going to talk mostly today about the prop shop, your new entry into futures funded prop trading and potentially other asset classes in the future. But right now, someone that's using Apex or another prop firm, if they have a Rhythmic account, they can use TickBlaze right now, right? They don't have to. They
Absolutely.
could just yeah.
Yeah.
It's
So
free. It's essentially free, right? Or
yeah,
free if they have a prop shop account.
well, TickBlaze is a free platform for
It's free
retail,
platform, right?
very
Yeah.
similar to MetaTrader. We
Yeah.
followed that business model because our business model on the platform side is B2B. So we work with institutions, quant funds, brokers, and prop firms. But on the retail side, it's absolutely free, and it is a Rhythmic approved platform. So obviously, any prop firm using Rhythmic can use TickBlaze, and we'll soon be releasing CQG very shortly. Yeah.
Cool. And for those in my audience, many people are using TickBlaze. It's a newer platform. There's going to be some growing pains with newer platforms as you onboard a lot of new users. But one of the things that I'm offering, you can check some other videos that I have here on my channel, is that I'm offering my desktop, my workspace that I use every single day on TickBlaze, which is what I trade on in my trade room. You can get a copy of that down below in the description below if you're interested in getting that. All right, let's switch gears to prop shop. Okay. So the question, I've done these interviews in the past, and the one I always start with, other than the money, what in the world would cause you to put your toe in this very crowded space, which is prop? It's a two-part question. And then the second one is, many companies say they're differentiating. Obviously, having your own platform is a major differentiator. But what do you want to be known for within this prop space?
Trailblazing new territory. So essentially, for us, what gives us the I guess you'd say perspective to even have a voice in this space is that we have one of the largest futures communities in the world, right? We fueled pretty much every single prop firm in existence with all of our customers through the other 5 companies that we have. So not only did we build technology and partner with every other prop firm, we sent them all of our traders. So it was the biggest viable option for us, is that we knew that we were going to expand into prop 3 to 4 years ago. It wasn't something that was just coming on a whim. And it was the biggest expansion play for us. It's actually the reason why we acquired TickBlaze in the first place. It wasn't that we just wanted to start in the prop space, right? It was a very calculated and strategic play over the last 3 to 4 years. Yes.
Great. Okay. So let's get into some of the details. Before we get into specific details about the programs and things like that, you offer both evaluations and no evaluations. They're called Warriors and Gladiators. There'll be plenty of links down in the description below where you can find out more about the prop shop and the structures and the accounts. But one of the things that I wanted to just hit right up front was you are offering and being very aggressive with no evaluation accounts. And there have been some firms in the past that have had got themselves into trouble by extending that much buying power that quickly. Now, let's be honest. I mean, you and I have been doing this a long time, and many other prop firm CEOs and and other more enlightened, even YouTube content creators have finally said the evaluations in these prop firms are a little bit of a joke, right? You're not really evaluating anything in 1 day or 10 days. So it doesn't make a huge difference to put people in a payout qualified account right away and then see how they manage risk within that. Hey, there's just a quick interruption to the video interview I'm doing with Sean. Just want to let you know that depending on when you're watching this, the best way to find out about the best deal going on at Prop Shop Trader is by checking the description down below in this video. I'll make sure that I always leave the best code or the best link to get you that. Right now, at the time I'm recording this and in July, it's about 80% off of Warriors, which are the evaluations, and 40% off of Gladiators. You're going to want to use code TDG. That's code TDG to get access to that. And again, all that information will be down below, whether you're watching it in July or I'll update this video so that you always know what the best deal is going over at Prop Shop. Thanks. Now back to the interview. Thanks. That being said, you're offering a lot of those accounts or the potential for someone to buy a lot of those accounts. So maybe you can tell us a little bit about what went on in the background to make sure you were financially able to do that, how you manage risk, and how you're very confident that you won't fall
Sure.
the ways of some of these other firms.
Yeah, great question. There's a lot of questions in that, so I'm going to
Yeah.
just kind of take them one at a time. First and foremost, I'm a stats major, so I graduated with finance degree and majored in statistical finance and corporate finance. So one thing I want to mention with that and why I lead with that is that proprietary trading firms are a business of mathematics, right? So when you look at statistics, you look at traders coming in, traders leaving, traders scaling, accounts, rules, how much profit, how much you put behind a trader. It's all based on math. It's all based on numbers. It's all based on calculations. It's all based on formulas. It's really about financial modeling. And so if you look at any institutional firm or anybody that's managing big capital, they have financial data analysts. They have analytical spread frameworks. I mean, so what we did was we looked at the breakage that happened in a lot of the firms out there that were running accounts. And it really just boils down to the fact, let's just call it as it is. I mean, you're evaluating and you're paying traders out in simulators to find the best talent, right? Any prop firm, they want to be able to scale big traders. I mean, that's the dream. But at the end of the day, that's not always as easy as it is, right? I mean, there's you got to kiss a lot of frogs to find a prince, so to speak, right? And for us, the biggest thing for this was data. And the reason we offer the account structures we do is because we cap our payouts. We're very open about that. We're very pro that. I wish more firms would do it because it really sets a better foundation for you to be able to calculate your inflow versus outflow and how you pay out traders. The other thing for us is solvency. Like the number one thing we discuss on a daily basis is our exposure to payouts, our exposure to risk, our exposure to calculations, because at the end of the day, if you do not know that at every time of the day, then you don't really understand the business at all. Yeah.
Okay, so then with that in mind, how are you making this ultimate determination? I know when you did a bunch of launch webinars and you led with what we've heard elsewhere and I've heard elsewhere, and I'm not saying that elsewhere it's disingenuous. It's just you planned from the very beginning to have a clear path to put people either in live markets or have a way in which you're finding and identifying talent that you can either copy or work with their alpha. So you've only been in business for about 6 weeks or so.
Sure.
Do you see a pathway to that, or are you finding that the cohort of trading behavior is exactly the same? And I'll just ask just those 2 questions and then follow on after that.
Yeah. So the biggest issue that we seen was that traders, a lot of traders don't want to go to live because they've gotten bitten by the excitement of the sim game. And I'm just going to call it as it is. Most firms are not equipped to move traders to live properly that excite them about moving to live. One of the biggest problems that we seen was the moving to live model was flawed by a lot of firms in the existence of our industry. Is that anybody that's in the sim game and knows the evaluation side where they can get payouts in the sim side while they're getting evaluated, they can do the math. If you're using trade copiers and if you basically have the ability to take payouts consistently as you're building that track record with the firm, when a lot of times traders get called to live, if you're not able to put them into a path where they could make as much money or more in a live account, why would anybody even want to go to live? Right. And this is a bigger question that I think needs to be asked, is that the real path to live needs to be structured in a way that's scalable, exciting, and actually traders want to be with you as a firm. The way we've built our evaluation side and the payout side is that we'll be able to identify very quickly if we can move someone to live. But if we know we can't move them to live, we'll be contacting them very quickly to either improve their trading or just ask them to leave the firm.
Cool. So speaking of that, I wanted to touch on this risk framework that you have that actually notifies people in near real time. I think it's currently at the end of the trading session. This is a super big, unique functionality and technology that they built here, folks. So, and I want to just make sure that it's clear what this is. If for some reason you have violated or are sort of dancing at near the edge of the cliff here, you have a risk engine that will send out some emails and warnings. So there shouldn't be any of this trade, ask for a payout, and then be shocked when you're told that there was a behavior in your trading that didn't meet the requirements or expectations. So can you talk a little bit about what that is, how it works, and how you're seeing it course correct already just in the time that you've been live?
Great question. I'm going to lead with we were victims of that first, right? So one of the things that really bothered me over the years was watching all of our traders in our group be denied payouts or be working with firms that ultimately changed their rules midstream, or sometimes traders just didn't even know if they broke a rule or if they did something wrong. They're literally just human beings. They're traders trying to be the best they can be. And then all of a sudden they request a payout and, oh, Bob's your uncle, you get denied for whatever reason that nobody even knows about. And if a firm, in my opinion, and I'm just saying from my perspective, if a firm is truly vested in the success of a trader wanting to become a great trader and moving them into live, then we should be doing everything possible to be working with them on a day-by-day basis to ensure that they know everything that they're doing, whether that's good, bad, or in between. So there's no hidden agenda. If a trader is actually trading well, they should be paid out. If a trader breaks a rule, they should know immediately or as soon as possible. So that way there is no hidden, oh, gotcha, right? When they go to request a payout and they didn't even know what happened. So we could have launched the firm 7 months earlier. I think you and I talked a long time ago and you're like, when are you launching? When are you launching? I said, well, we're building out massive risk infrastructure so that we don't have the headaches that we've seen in the space with a lot of the traders not being treated the way they should have been treated. And a lot of that is just about information, deliverance of the proper information so that traders, when they know the rules and it's transparent and it's clear, they don't break them. If they break the rules, they're known in advance if they need to communicate with us, if they need to contact our compliance team. And we built the system so that we can help traders identify as fast as possible when that happens. And what's nice is that way you have days to communicate with us to do the appeals or at least prove what happened, right? And that will give us the ability to basically get you paid out, even if there was a rule broken, right? And that's important.
Right. And I personally have a little bit of experience with my own community where we trade micros, and occasionally we will have a long and short in a correlated stock indice. And your team has been very good on listening to those descriptions, why that's occurring. And again, we're taking very small risk. So
we've seen that on the hedging side too. Like someone actually gets into a hedge by accident because a trade copier malfunction, or an HFT goes off, and it's like, I'm not a high frequency trader, but there was an order discrepancy in Rhythmic or on the platform. So our system is very lenient, but our team has also been trained to ensure that they know how to communicate and fix this quickly and remove things that are actually on us to remove, not on the trader.
Right, exactly. And as I always say, I think PropShop and all the other firms should move to rules and structures ultimately that that benefit the most amount of traders that are doing things right, because it's easy to identify the gamblers and the shot takers and all those types, and they're going to be part of your customer base and all these customer bases with this current structure.
Well, you asked one question that I didn't get a chance to answer, and I'll just end with this here while we're talking on it, is that we also realize that and my hat goes off to a lot of the firms out there that have come before us, because we understand how hard it is and difficult it is to build something that actually is built on a strong foundation. And it's an unfortunate reality that, businesses, any business in any industry is going to have growing pains. We actually were privileged enough to be able to see some of those growing pains with some of the firms that actually launched before we did, and be able to identify things that we wanted to build differently and do things differently so that we didn't have the same headaches or the same types of growing pains that, unfortunately have happened. And we've been very successful in that. And that's one of the things that really separates us from a lot of the others is just being patient and doing things properly.
Great. So typically in the past, when I've done these interviews, I really got into the details of the programs and the rules. I don't want to do that today. I just want to ask you on one rule and one structure that you set up, because
Mhm.
I get it asked all the time. Why intraday? That's not normal. Will you offer end of day and those types of things? Before you answer, I just want to say,
Mhm.
plenty of information down below. If you first time ever seeing this, I offer training and education that will allow you to trade these programs properly, which is essentially managing risk in a small account, which is all these are. If you trade that way, any of these structures will not affect you. If you trade with a daily risk budget and you trade properly, it's not this nonsense that, oh, I can't, I have to let my winners run. And this is an artificial trading environment. So I don't believe in any of that. But that being said, I want to address my audience, and my audience is always asking, why intraday?
Well, it's actually a great question, and I'll just be honest. It's because it's good for us as a prop firm. As a prop firm, we're in the business of managing risk, and we also need to make sure that the traders that we move to live can manage risk, right? Like, I know the industry wants to hear there's some other magic potion out there, but there's nothing really sexy or different about prop firms. We're in the business of evaluating, finding talent, and then scaling talent. That being said, we knew that if we were going to implement a trailing drawdown function because it's good for our risk management, we also needed to implement differentiating rules that allow us to benefit the trader. So what we did was we looked globally, and we've pretty much evaluated over 150 firms in every asset class, and nowhere could we find equal to profit to drawdown ratios. And if you look at any of the account sizes, or if you look at any of the actual evals or direct to payout accounts, the majority are based on like a 0.5 or a 0.6 ratio of your profit target to your drawdown amount. We said as a team, if we're going to implement a trailing drawdown function, which is good for our risk management needs, then we should also give the ability for traders to have a bigger buffer on their drawdowns, which allows them to trade in equal territory. And you've seen this, Rod. I mean, most traders go with the 50K accounts because, you got a $3,000 target and a $2,500 drawdown. That's because the spread is the closest. But as you start to scale up those accounts on the different sizes, the ratio works against you. So anybody trading the bigger accounts, there's no incentive for them to want to trade that. And to me, that's mathematically unstable. Like, it doesn't make any sense to me. So we built an infrastructure that even if we use a trailing drawdown, a trader can actually have a much bigger drawdown, which gives them a lot more breathing room to trade within the confines of our systems. Yeah.
Right. But of course, they do have to pay for that. So it's a bonus or an upgrade. You can essentially buy more
Yeah.
risk or risk capital to keep your profit objective to drawdown ratio
Yeah.
intact.
And
Right.
it's
So,
monumental. I mean, with the discounts we run and the promos we run, it's all built into the same pathway. So, at the end of the day, it's majority of the traders just go with the biggest drawdown, right? Like we
right.
we we have three different tiers. It's either they don't go with it or they just go with the max drawdown because they know they want it, right?
Right. All right. Quick commercial again for Futures Fanatic and TDG. If you don't risk more than 10% of your account value based on the starting value as your daily risk loss, you will never get into any of this. When we're talking about more drawdown, that means increasing the 100% of your account that you can lose. Right. So let's not lose 100% of our accounts.
No.
You wouldn't deposit 2,500 or 3,000 or 5,000 of your own money and put on minis and trade crazy. Just don't do that. Treat it like it. Whether you paid $15 or $500 for this $2,000 the prop shop gives you, treat it like it's $2,000 and trade it accordingly.
To your benefit, Rod, and I'll add to that, you're the only influencer or vendor that I've seen that actually teaches that. And it's actually one of the most sound risk structures in the business. Coming from a background of trading and risk management myself, what you're talking about is absolutely the best way to be able to have a long game in this space. Your guys don't get through them quickly, but they get through them. And that's the difference. Traders try to rush through the process. They try to get through the accounts, get as quick as possible, or pass an eval as quick as possible, or get to a payout account as quick as possible, versus build up the account and build up that over time. Like, it really is about changing the perspective on how to manage the capital. And you said it, right? Like, you're actually not trading the account balance, you're trading the drawdown amount.
Yeah, and you have an opportunity, everybody, that hopefully will be around for quite a while, which is to use leverage across accounts and copiers. To you can have the same daily impact in terms of absolute dollars just trading a few micros across a number of accounts, and it also helps your emotional capital. So anyway, you can check the description down below or other things on my channel if you're interested in that whole approach and my approach. So along that, I always ask this question: you ever see in the future where you could actually remove the notional value and just say, hey, you're paying $300 or $400 for 1,500 or 2,000, or you think it's a marketing thing that could never go away?
I don't think it's ever going to change, because
Yeah,
that would have to be every firm in the world would need to adapt
I
to
know,
different. It's
I know.
it is
So
what it is. So
yeah, it's the notional stuff is just there. Okay, so now I just want to get into any kind of lessons learned already post launch. You had mentioned before you spent quite a bit of time with your team, both on the tech side and the risk side, and with the platform as well, putting this all together. And you've been out in the market now for about a month and a half. Any surprises or any user behavior insights that you didn't think you'd see, or
um,
anything that you weren't prepared for?
no, because there's I think the biggest was just the load on support. We've always been on big on support. We actually brought in a big team and trained them on compliance for months before launching. So we were being very proactive on that, knowing that because it may not be the same for other firms, but for us, because we had such a large group and this large infrastructure of traders and the other brands, we were playing chess with regards to being able to forecast what we would have to have on staff to be able to support that load. So I do think our team was well prepared on that. I know we have a very, very strong rating right out the gates. One thing that I do think is important is that the only thing that we thought we would have issues with is having to prove credibility and having to prove stability and stuff. But I think it's because of our reputation and just the fact that we have such a big name across the space with so many other partners and brands. It's been our saving grace, right? Because a lot of firms come in and nobody trusts them. I don't blame a lot of people. I think you should be a little nervous or skittish with a lot of firms that are coming if they don't have the experience. But I don't think we had any gotchas, right? And I'm very grateful for that. We had an executive meeting today where we were talking about how well things were going, and that's a gift, right? Not all businesses are so fortunate. Yeah.
Cool. All right. This is a little segue, unrelated to what we were talking about, but I'm going to put timestamps for this video down below. And I
Mhm.
assure you that many of our fellow traders in Europe are going to go right to this question, which
Mhm.
is any updates on timelines, or maybe you could give a brief background as to why you're not able to support certain European countries now. Number one question I get.
It's actually well, it has to do with the be able to move traders to live prop. So
Mhm.
you got to understand, TickBlaze is a Canadian company. NeuroStreet's a Canadian group of portfolio of brands. Prop Shop is based in Estonia, done on purpose for the reasons of we do intend to expand internationally into the FX markets in the future. So we wanted to base it into an environment where we could structure the operations without regulatory restrictions, right? So that was a big part of our build out. It wasn't that we just decided, oh, we're going to start the firm in X country and this. No, it was all calculated because we do intend to expand into FX, and we will offer FX and CFDs as the expansion happens. The big thing for now for future is it has a lot to do with the imposed limitations as our FCM that we work with, our brokers that we work with. We can't bring in traders that are not legally acceptable in the eyes of the broker, and that we can't move to live capital or live prop. Now, we do have expansion plans in place with lawyers internationally to bring us into the big five or the big six. But you got to remember, in Europe, every country is different. So there's different regulations in each country: Germany, France, Spain, all of that. So it is on our radar. It is something we've been talking about very recently, and we do intend to expand. It's against the law for us to accept an evaluation or a payout in sim to somebody coming in to be evaluated if we know we can't move them to live. So it really is about ethics, it's about legalities, and it's about jurisdiction and regulatory requirements. Once these countries get lifted, we'll just open them up and just keep expanding. Yeah.
Yeah. So it's a bummer, but it's for the right reasons, right? Which is, and you could potentially look the other way and be violating that and take in all this sim trader money from those
Mhm.
those countries, but not if you have to tell to your regulators and your investors and your board that we have a path to live for everybody that gives us a dime to be evaluated.
And that's the big question with legal. When we built out the firm, our regulatory counsel said, like, it really is about the moving to live. I mean, if you and I both know, the big question is what's going to happen. Is the regulation changes? Is the CME? Who gives a shit, right? Nobody knows. And at the end of the day, if it happens, everybody's affected. And therefore, what matters most is, can you move traders to live? Can you, if you got audited by regulatory counsel or anybody that came in to look at your operations, can you show that? What is the process? Is it documented? Is it structured? And it's literally against the law for me to sell an account to somebody that I can't move to live. So we're not even going to play that game.
Yeah. Okay. I wanted to switch back a little bit to the platform, just to talk about a couple things in terms of maybe if the audience isn't familiar with TickBlaze. So TickBlaze is it's Java based, right? It's
C# and Python.
C#. So it's a Windows product currently, right? So it's not available it's not available as a web-based product. So this is also like a two-part question. Does someone have to use TickBlaze if they're trading on PropShop? We already sort of discussed that. And is there a path on the roadmap that will allow people to use TickBlaze in some sort of web-based way at some point in the future, so that because everyone does like TradingView and Trade-Evade and Project X?
Sure. So you got to remember there's two different discussions, right? TickBlaze is a different company. Prop is a different company. So right now we support Rhythmic. So anybody that's using Rhythmic technology integrations, we can support, right? So it's not required that you use TickBlaze, but it is recommended in that, we have a lot of value to give you. I mean, we have education, free open source community. There's a lot of software and strategies and algos that are free that traders can download and just have them. So there's a lot of value and benefit to using TickBlaze, but it's not required. That's the first question. But when you do come into prop, you get TickBlaze. So it is a license that comes with the platform if you choose to use it, right? And it really is just up to whether the trader wants to or not. The second question is, are we bringing TickBlaze to the web, right? That's a big discussion, right? That's a big build out, and that's a millions and millions of dollars build out.
Yeah.
It's in our roadmap. It's been discussed at the board level with investors. It's most likely going to take place once the Series B is completed. Yeah, we're getting ready to prep out the Series B, which is a really big institutional expansion. We've got advisors coming in from institutions. I can't name them because I'm under NDA, and we'll be doing a press release to announce those details very shortly, actually. But some pretty big players are stepping in to work with us on the TickBlaze side, both on the institutional side and also expanding into the B2B side. And I'll just let a little gift out here. We just closed a big acquisition, so we have technology coming out for prop firms. So I do see a path for expansion into the web. We have strategic partnerships with some of the big companies we work with for our charting integrations, and they have a seamless port for us to bring the software into the web. It's probably going to be a year or two until I can honestly give you, anything of merit. But, if you look at any of the big platforms out there, they were at market for years before they even entertained going to the web, right? It's a really, really big lift, but it is a lift that is in our roadmap. Yes.
So because I asked the question because to my knowledge, and I get these questions a lot, so I just want to cover them here. I'll put them in the timestamps as it applies to PropShop and TickBlaze. So to my knowledge, there is really no web native platform that works with Rhythmic. I don't think so, right?
Rhythmic has a web terminal.
They have a web, they have a web terminal, but not really. All the third party things, Quant Tower and Motive Wave, and now TickBlaze, you're always going to be in that Windows environment, which is okay. Does anything change if you end up having a different data feed like CQG? Would you be able to offer PropShop accounts that could be traded through TradingView in the interim, or is that not the case?
It's possible, yeah. I mean, I've had discussions with people on that side, and we're just finishing the integrations now with CQG. I'll just kind of come out and talk a little bit as to why TickBlaze is a web-based, is a desktop application. It's a quant platform, right? Initially, it was built for institutional quants, right? And then we expanded it into the retail side. So, I mean, it does what no one else can do on any other platform. On the algorithmic side, we're about 5 to 10 years ahead of any other player in the game. That's our biggest sexiness factor to the platform, is that the algorithmic side is cutting edge. The retail side, if you look at the discretionary side, I mean, it's like a NinjaTrader or a MetaTrader on steroids. We revamped the entire API from the ground up because of our developer integration. So we're very pro like indicators and algorithms and strategies because that's what all the masses use. And so we had to really take the lift first on the desktop side, but that's been completed. So now the next expansion is discussing the web. So it is in our discussion, and investors want to see that as well. Yeah.
Very democratic answer. I normally say, shut up. Real traders trade on Windows and Macs are not for trading, right? But of course, the web has become very popular for all that. So I
Yep.
kind of get it.
Yeah.
All right, now I'm going to go back to prop shop for a moment. We touched on this a little bit. Could you give us a vision, since it probably hasn't happened yet? What is this trend? You talked about the transition to live. What does that kind of look like in the real world, in the sense of I'm a trader and I bought 10 evaluations of whatever size, and I'm doing well, and I'm demonstrating that that I meet the criteria that you might want to do that. What does it look like? Do you consolidate all
Great question.
yeah, what does that kind of look like? And then do I end up with one account? And how you mentioned making it sexy or making it attractive. What does that mean?
Well, it means you need to have a whole lot more money as a prop firm to be able to do that, right?
Yeah.
First, so that's one of the benefits that we have is that we did bring in capital. We do have investors. We do have the solvency to do these types of things. The biggest thing for us was understanding what we need from a regulatory perspective with the broker, and B, what the trader wants. So there's two discussions, right? When we move a trader to live. Okay. Two discussions are going to happen. It's either going to be, we're going to call you up and you're going to deny the request, and then you get paid out in your sim accounts and you leave, or you accept the offer and you come over and we move you into a live brokerage account. We then look to scale you. But, you can answer this, Rod. Maybe I can put this back on you. I mean, if you're trading 10 accounts in a sim account using trade copiers and you're used to making X every single month because you're trading on expanding that leverage, if our system was built to bring you in and you weren't able to at least make that or more, would you want to move to live? That's the question,
No,
right?
you'd have to have the same amount of buying power and capital, and then
So
a little bit of a change of mindset, right? Because your sizing is going to be different. You might use different products than you used before.
so
I mean,
at
I
the
think it's going to be a really fun part of the next couple years to see how this all takes
well,
place.
well, at the broker level, they don't let you
Yeah,
trade 10 accounts, right?
right. I know. Yeah.
That's a legal issue, right? That's a
Yep.
requirement from the exchange. So you can get maybe one, two, maximum three accounts, depending on if you're using different strategies, and we can prove that to the broker when we set up the sub accounts. But what's important for us is that when a trader comes over, you're going to have what's owed to you as your payouts, and you're going to make a decision as to whether you want to be accepted into live and come over. What we call that is the pledge, right? You're going to pledge your payouts as your deposit into the firm as essentially your contribution, right? And then what we do is we have a calculator that basically looks at what you have in max payouts plus any overage in your accounts, and we pledge a multiple on your max payouts, right? So it really is a factor of your max payouts and how many accounts you have. So every trader is a little bit different, and every trader's account size. So I can't give you an exact number here, but what I can tell you is that we pledge more than you put in. So you're starting with a much larger live balance than we know any other firm is providing, right? And the reason we do that is because that's traditionally how it's done in the equities market, right? When we built out the firm with our lawyers, they said, if regulators come, you want to really make sure that you're doing things the way that the rest of the world views as accepted.
Right.
And so when we look at what's accepted in futures, it's gray area because it's a new wave in the space, right?
Mm-hmm.
But in the equity space, I mean, prop firms been running for decades. So normally in the equity space, trader comes in, they put a
First risk,
balance.
loss, and leverage. The prop firm
Exactly.
just provides leverage and doesn't have much risk.
And so what we do is we pledge the capital as a pledge on your max payouts based on how much you're owed. And then you start off with an 80-20 split. And then within the first 30 to 90 days, we'll scale you up to 90-10 split based on your performance. And what ends up happening is that we remove the caps. So there's no caps in a live account when you trade the live brokerage account, because you're now trading live. And we have risk templates that have been built so that you can't blow out your account. Like some firms don't have risk infrastructure put on the live side because brokers have their max drawdown. I mean, if you go to some of the live FCMs, I mean, you ask them what's your margin call limits, they're going to say 80%, and you're like, whoa, we would never put a trader into a live that would be able to blow out their accounts. I mean, we've built custom risk infrastructure for that. It's one of the reasons why we took so long to go to market was we really wanted to build an infrastructure that protects the traders in live, so that way even when a trader moves to live, there's still safeguards in there so that you don't basically, put yourself under. Yeah.
Okay. So speaking of live, um, I know we've had this discussion offline because I'm predominantly a uh, treasuries trader and
Mhm.
actually an options treasuries trader. And since some of the scandals or whatever happened with the rhythmic data feed and treasuries, they've been disallowed and shut off at many firms, including yours right now. So is that on the priority roadmap, or is the idea, hey, if you trade stock indices or other supported products, and will allow treasury trading when you're in a live account, or what's the current
We
status of
we
that?
have we have technology that's going to be implemented into prop as well as tick plays in the next 6 months. I can't give an exact timeline on this, but once that technology is integrated, we'll most likely be moving to a different system, which will basically be, we'll be in control of all of that versus relying on outside technology to fuel that. So I can't really go into too much detail right now, but just know that, we will be moving to a much more, I guess you'd say, closed loop system internally, and then once that's done, then yeah, we'll be looking at it, opening up the treasuries at that time. Yeah.
Yeah, that's great. So without getting into too much of the background, there were traders out there, if you can even call them traders, probably more just scam artists, if you will,
Mhm.
that figured out how to manipulate the data feed or to get fills that wouldn't really exist in a live market. And it was just going to be a lot of work to get to the bottom of how that all took place. So many firms just decided to remove
Yeah.
access to those products for
and
right now.
and it's an unfortunate reality, as some
Yeah.
of the traders like yourself that trade those markets are affected, but you got to also look at the overall risk to all the firms that were affected by that. Like,
Mhm.
companies have to do what's best for all parties at large versus just the few that are affected. And I understand why a lot of the firms pulled it, but we made the decision not to even go live with it, so we didn't have to renege and pull it out, right?
Right. But how about Bitcoin, micro Bitcoin? Can we add that?
Well, there's going to be a lot of things that'll change when we open up CFDs and international expansion. I mean, once all that
Oh,
happens, I mean, who knows? But I mean, I think a lot of things will change with our own technology infrastructure.
okay.
So if you give me an opportunity to come and explain it, down the road, I'll be in a better place to do that.
Is the micro Bitcoin that's the fact that some of your brokerage relationships don't support that
They don't
product yet, right?
support it. Yeah,
Yeah,
and
yeah.
we do have plans to look at other
New
liquidity
all-time
providers.
highs today for Bitcoin.
Yeah, yeah,
Very popular product.
it
So okay,
is. It is
yeah,
on the spot side. Yeah.
yeah, right. No, it's on the future side too. It's trading a lot of contracts. I don't remember how many contracts it traded today. Um, okay, now I want to get a little bit into what we were discussing before around risk management and the proper way to trade these types of programs. Given everything that you've seen when you were doing all your research, and now with 6 weeks plus of actual trader data, are you seeing any different types of behaviors, or is it essentially similar to what you've seen in the past, outside of people that might be in your own trade room and such? Or let me just ask it a different way. You have a payout page. You're paying people out.
Mhm.
Some of these payouts are pretty nice, like 2 grand or 1,500 across a lot of accounts. What style of trader was that? What were they trading? Can you give any insight into some of the data that you're already seeing on the back end, or any data that you think would be useful or helpful that is
Yeah.
usually not shared by prop owners?
So, well, I can tell you a little bit about, like, can we? I'm going to shift that conversation just a little bit to just looking at the ratios of what the favorite account sizes are first. Let's talk a little bit about where the bulk of most traders gravitate towards. Most traders are going into the 50 and the 100K balance accounts just due to the sheer fact that the cost for those accounts are within reason, and also just the sheer aspect of it. You can reach a target objective in a faster period of time, right? So, a lot of traders ask us, how can you have 20 accounts, and how do you have such big accounts? Well, we didn't want to limit traders, but we have payout caps for a reason, which allows us to have the number of accounts in motion. But most of the traders don't buy more than 10 accounts at a time. Like, most traders, we don't see a lot of traders buy 15 or 20 accounts. It's a very small subset of the audience. right? So obviously, we've been in existence for just under 2 months now, but I mean that's the beginning data points that I'm able to share with you. In terms of payouts, it's an unfortunate reality. We do see traders take payouts right away, and then market conditions change, and maybe they blow out a few accounts and they have to reset or have to come in with new accounts. We have a few traders right now that we're getting ready to call into live and bring them over. So there is consistency happening. But like you said, it's only been 6 weeks since we turned on the firm, right? So 6 weeks is not a lot of time in the financial markets.
Gotcha. Okay. Um, what could you share with my audience around, other than taking people to live and all the work that you did? I just want to ask again, why prop shop? Maybe in the elevator pitch on why prop shop with all this choice, and frankly a number of firms that are on the surface doing it even more conservatively than you, right? Offering maybe fewer accounts and less things, and have dialed in all that stuff. So it makes many of the traders feel comfortable working with that firm, given the amount of accounts and leverage. So, but why prop shop? Why would I choose when there's 20 or 25 other things out there in a quick 30 seconds? Why prop
Sure.
shop?
I mean, it's just the value proposition that we provide. I mean, ultimately, the fact that we have the best pricing, some of the best pricing in the space. We have the most flexible account structures, all the way up to the largest account balance ability. Like we have 500K balances with the $30,000 drawdowns. So we have really, really big account structures for traders that want to trade that. We also offer a lot of accounts. But what's really important is that we're very open about how we run our payout structures. So a lot of companies, they don't really talk to you about why they do things or why their payouts are designed the way they are. And we're very pro like change the industry. We really want to change the narrative a little bit. And I do think that you want to get involved with a firm that has experience with not just trading prop firms, but just the trading industry at large, right? Like we own our own platform, right? And I don't mean a white label of charting widgets. Like we have 30 developers across the two companies. I mean, we're a big organization across the entire ecosystem of companies. So we wanted to expand prop because we knew that we wanted to do that 4 years ago. It wasn't something that we were just interested in doing. And it was because we essentially wanted to expand into we didn't want to go in the brokerage route, right? Like if we're going to answer your question probably in a more direct way, we wanted to go in the prop because we did not want to go down the brokerage route. Yeah. I mean, it was either become a broker or become a prop firm. And being a prop
You
firm
mean
was
you didn't want
way.
to be a regulated entity that has to deal with jurisdictions all over the world and all kinds of
Well,
nonsense?
our
Okay.
experience has always been tech. So building the prop in the back end, is not an easy thing to do. And
Hmm.
we have a lot of experience. So that was really the best viable option for us as a company and an
Yeah.
ecosystem of companies to expand to. And it's also just really good for us as an organization. I always like to look at it as, it is the major leagues, right? And not all firms will last, right?
Hmm.
I really hope that some firms that are just learning the ropes or understanding the game will look at things that we do and other firms that have a little bit more experience, not just in prop, but in the industry at large, and adapt it, right? I hope that some traders will learn that capping their payouts is a really good thing for risk management. And it's also good for traders. It's also good for the business, right? So, I do like to lead by change. We did that with Tick Blaze. We did that with ARC. We did that with the other brands. And, I think if a trader is going to adapt into working with a prop firm, what's important to you? Working with a company that has a good reputation and also a lot of solvency, or just working with the next website?
Right. Now, you had also mentioned, and I know this isn't happening anytime in the immediate future, but you're kind of going the opposite direction of what we're seeing now from some CFD and FX players that started in Europe and built good, sustainable businesses on that side. And for those that aren't familiar, I have been very anti-FX and CFD, but I'm starting to slowly change my opinion, especially with the success of My Funded Futures and some others that started as FX firms and have done a good job in the future space. So you're going the other way. Do you envision a time? We talked a little bit about why you can't provide demo accounts to certain European countries and certain countries. But at some point in the future, you will envision offering multi-asset classes and lots of choice around the world in terms of the types of products and things that you want to trade in this type of environment, maybe crypto as well as CFDs and things of that nature.
So it really boils down. I did a post on my LinkedIn profile. If anyone's interested, you can go there and just read up on it. And I think it's very dangerous for a prop firm to try to be multi-asset right out the gates. I think it's a very very inexperienced way of expanding business. I think any firm that is listening or anybody that has experience knows that you walk before you run, so to speak. So if you look at Forex firms, they're now slowly moving into futures. It's because the market share is changing and the attention is moving into futures as well. But let's not lose sight of the fact that the Forex space is major size compared to futures. The other thing too is that we actually want to pioneer new ground into Forex, right? We want to actually bring futures models into Forex. We do not want to bring Forex models to our business. So we view the Forex prop game as broken, right? I look at the Forex firms and how they operate, and I just find them to be completely broken. So I want to bring change to the Forex space. I don't want to adapt into what they're doing. It's a very big difference for me, and that's my own perspective. And no other firm that I know of has done that. No other firms even discussed it. I think what would be really exciting is if we brought futures infrastructure into FX, and we intend to challenge the status quo on that. Yeah.
Okay. And you had mentioned earlier a little bit about pricing. Depending on when someone's watching this, if they're watching it shortly after I post it, you probably will still be doing these very deeply discounted promotions, especially for your warriors, which are the eval accounts. But even if you add it all up, some of the discounts that you had offered on the direct to funding or gladiator accounts were also very compelling when you take into account activation fees and things as such. So can you share? I mean, you don't have to give me the whole pricing plan for the rest of the year, but I think a lot of traders have just got used to deep discounts being there all the time. I know you're going to run this through the end of the month. Is there a real sense of urgency now, or do you anticipate that this is going to be kind of the pricing model that you'll be offering going forward?
We have different promos. We met today as a team to discuss the different ways in which we can add value. You brought some pretty good innovative discussions in prior discussions with us, and we've looked at. I mean, let's just get the elephant in the room out of the way. And business is business. Whether you're a prop firm or whether you're a trading firm or whether you're a broker or whether you're selling sandwiches at the grocery store, it all has to do with understanding the competitive landscape. Who's doing what? When are they doing it? Why are they doing it? And you cannot discount too much, because what ends up happening is then you start to break your financial model. So there's certain ways in which a firm can discount, certain ways in which a firm can offer promotions and bundles and packages and stuff. Everything that we do is by design because of the way in which we've structured payout caps and how we pay out our traders on the simulated side. So for us, it's not we're just going to run a promo. It's everything's calculated for us. And we're very big on data. We're very big on running the metrics. And we run promos strategically at certain times to test different market acceptance, whether that be a discount, whether that be different prices on activations or resets or bundles or packages, etc. So there's no set in stone way. I mean, we're going to run different promotional offers staggered in different times, and we'll just basically do what we find works best for the company, and also what we find that traders really adapt to the most, right?
Right. And without getting into too much detail, some of the suggestions that I had thrown out there, especially with direct, is I'm looking for ways in which some of these firms can take a lot of their money from the success of the trader in the first payout, for instance, so that you as a trader are very incented. You pay a fair market price for the evaluation, but not some ridiculously low price that you don't value the evaluation at all and you just churn through them. So that's the current model. I've been suggesting to Sean and others, is there a way we can get to where the price to pay is a little bit higher initially, and then it's even higher because you take more out of that very first payment, which is, let's also be honest, is not a stage that a lot of traders get to because they're doing things different ways. So anyway, those are some of the things that might hopefully be in the industry at some point. This idea that when you get to that first big payout, that's where you're truly in partnership with the firm, and they get half, you get half, and then going forward, you move on your merry way, and you're very incented to get to that point. So anyhow,
I think too, one of the things that we should ultimately call out here as important to us is that because we pay weekly payouts, right? So we have seen that traders that have come in and taken a big payout and then they just go and blow up the next week. So just because a trader takes a big payout in week 1 or week 2 doesn't mean they're really going to last a long period of time. And it's an unfortunate reality. And, us as a company, when we start to see big payouts, we start to kind of really perk up and say, okay, maybe this trader's really got something here. And then when we look at the stats, it's like, you have to be patient and sometimes there's always a diamond in the rough somewhere, and it's sometimes the least you would expect it, right? So, I think over time, we'll be implementing new different models and different structures around discounts and activation fees and different ways in which we can be creative. But right now, the only thing that matters to us is making sure that we are sustainably paying out traders like we said we are, and maintaining that credibility for the first very, very near future. Yeah. I mean, for us, it's really about making sure that, we do what we say we're going to do and we don't change things.
Yeah.
That's
Cool.
important. That's
That leads
important.
right
That's very
into our,
important. Yeah.
yeah, leads right into the obligatory closing thoughts comment. We've covered a lot of ground here. I like to try to make these discussions bite-sized enough so that people can get through the material and hear the discussion. So why don't we just end with that? So how do you want to leave this, the closing words or words of advice for traders out there?
Well, I've always just believed that, you shouldn't have to risk your own money if you don't have to, right? Like our whole slogan is that, right? The trading industry's changed, right? When you and I first started, Rod, I mean, we were opening up brokerage accounts and we were trading on one account. And the way that it works is
Minis. We're trading minis too,
there
probably
was no micros when we
in an
started. There was no
undercapitalized.
minis. Like I remember
Yeah.
taking a trade on the Nasdaq and it would make you twitch, right? Like,
Yeah. Yeah.
so
Dude, real
for
quick, sorry to interrupt. It still does. I share with my group. I have an account that's mid six figures, and when I put on a 4 lot in the NQ, it was $80 a point. I still get jittery
sure.
to this day with a lot of money in the account. So anyway, go ahead.
Absolutely. No, and I think
Yeah.
that, traders, there's a lot of traders out there that should not be limited to their passions. Like trading is a fun business, right? It's sexy, it's exciting, there's a lot of opportunity. It's extremely challenging and it's extremely stressful at times. But, who are we to, who let me rephrase this. There shouldn't be any reason why anyone that is passionate about the financial market should be limited by capital. That is the first thing that we stand by. The second thing is that even if you have a lot of capital, why the hell would you want to put it into the markets and risk it, right? That's why these firms like us exist, is that there's better alternatives and the world doesn't even know this exists. I mean, I was talking to some friends and they're like, what's prop trading? I'm like, it's but they want to open up a Webull account and just start
Yeah,
stating
we're
stock.
in this little ecosystem and this
Yeah,
little
it's
echo chamber
right.
that
Like,
we just think it's reverberating and reverberating and reverberating, and
like
most of the world has no
I have
idea what this
my
is.
neighbor across the street's a really successful stock trader who trades the morning open, and we were start
Right.
talking about like prop firms and stuff, and like he's like, yeah, like how do I get started? Like, what do you mean prop firms? Like I've been trading my own account, and I'm just like, God, like I do believe that there is still a lot to expose the world to. I think that there's an opportunity for us done right. But like you said, like why should we do this? Well, I do believe that not every firm deserves to be here. And I think that the ones that do need to be here, they should be the ones that are impacting change. And they should be trailblazing and they should not be fighting on social media and going back and forth and doing this. They should literally just be doing good by their traders, good by the industry, and standing for something that actually means something. Right. To me, that matters.
Cool. Hey there, just a quick interruption to whatever outstanding trading related content video you happen to be watching. Just want to let you know I have a website. It's tradersdevgroup.com, tradersdevgroup.com. And on it, there's a bunch of resources. And if you're here to learn a little bit more about active futures trading or prop programs, one of the things you might want to check out is the ebook. So there will be, of course, a link to this right in the video down below. It's prop done right. And if you're tired of struggling with evaluations and trying to figure out which prop firms you should go with and strategies that work for everything prop trading, it's prop done right. Check out the ebook. You can get it in the description down below. All right, now back to whatever outstanding trading content you were watching. Thanks. All right, now for the super important questions. What do you like to do when you're not working? What's Sean all about? What are some of your passions outside of your businesses?
I was a professional bodybuilder at one point in time. I blew my spine, I blew my knees and shoulders. So now all I do is cardio, light weights, and I cold plunge every day. So I literally
Can
take
I
freezing ice cold baths every fucking day.
can I get Ashley to send me a picture of your competitive days and I'll flash it up here?
No,
No,
it's
okay.
but
All right.
I was rather a large child growing up. I grew up,
Uh-huh.
and it was a big passion of mine to lose a lot of weight and train and just basically I just love the gym. I love that. I love everything about it. My wife and I, we love the gym. We do things that we love music. I like to mix music. Yeah, I like to mix music. I have a DJ set upstairs. I play blues guitar. right? So I like to
Okay.
play guitar. So I grew up playing Jimi Hendrix and Stevie Ray Vaughan when I was like 5 years old. So, I can get down with the BB Kings of the world, but at the end of the day, I love pulling out the decks, like the turntables, and just mixing
Uh-huh.
music, and just, there's nothing better than just letting it go with the music, man. Yeah.
Yeah, music is a reoccurring theme. Music and sports and those types of things with a lot of
Hmm.
traders. I got my guitar neon thing back there, and I have
Hmm.
5 or 6 guitars hanging up here
Yeah.
too in my office. So that's cool. All right,
Hmm.
now the most important question: where is the S&P going to close the year?
Who cares?
Oh, come on! You want to do that? Every
Yeah,
time I do a stream, everyone wants to talk about every little
well,
tick,
then
right?
what they should be worrying about is when the next crash is happening, because at the end of
Right.
the day,
Managing risk.
that's where the
Right.
millionaires are made, is when the
Right.
market
Yeah.
collapses. Like, there's the COVID, then there's the Trump election, then there's this, then there's that. If you're looking to buy and hold, and you're looking to change the wealth of your family, that ain't happening in the trading side of it. That's happening in the wait for the next market to go upside down type, and then just buy the TQQQs with a few shares and just let it sit there.
Right, exactly. So remember, I'll put a disclaimer at the very beginning of this, but this is not
Yeah,
financial advice.
I'm.
Look both ways before crossing the
Yeah.
street. What
Mhm.
did someone else say today? Wait 20 minutes before swimming after you eat. All this nonsense that you hear
Yes,
from your mom.
yes. The markets
Um,
are. You will lose all your money in the financial markets, and you will basically, be eating shit sandwich.
that's right. Yeah,
Right.
exactly, exactly. Why
Yeah.
even try? In all seriousness, that's what I look at my role as an educator. Is I'm a real big believer in this thing called the miracle equation. I talk about it all the time. There's a guy, Hal Elrod, who wrote a book called The Miracle Equation, and he recovered from stage 4 cancer. And his formula is just 2 parts. You have to have unwavering faith that it's possible, and then you have to put in the extraordinary effort. What I try
Mhm.
to do is just show people every day that if you manage risk properly, I don't care what your strategy is or what you're really doing, that it really is possible. It's possible to succeed in this. And firms like the prop shop, as Sean said, you don't need to risk your own money. You can use the leverage from these firms, and you just need to see role models out there showing you that it's possible, not these people that are taking massive payouts or promoting sort of reckless types of trading. So I'm just trying to do that. And prop shop's going to be a great place where you can do that, demonstrate that you have unwavering faith and commitment to this craft
Mhm.
and building this skill. And then you have to put in the extraordinary effort. But if you dig what you're doing and you're passionate about this, it's a drive. It's extraordinary. You got to put in a lot of time and screen time and practice and hone and see different
Mhm.
markets and different market conditions. But man, when you get over that hump and start to see the success, it's like the greatest business in the world, right? I think.
I started trading when I was in college. I remember getting in shit with my teacher. He was the former CFO for Levi's, and he was teaching
Mhm.
university classes, college classes, and he's like, "What are you doing?" He's supposed to be taking a test. He's like, "I'm trading penny stocks." Hell, I was trading penny stocks in college, and nearly got booted out of school because I was trading more than I was doing school, right? And then, that led me into this business, right? You can't deny your passion, you can't deny your calling, right? So many traders I talk to, and they're just so passionate about the markets, but yet they just get slapped with the reality of, like, okay, like this isn't just going to happen overnight, right? And you ask the question, why prop shop? And I say, well, maybe prop shop's right for you now, maybe it's right for you in a month from now, maybe it's right for you in 3 months from now, right? If you just somebody that wants to see a lot more track records, I mean, we post our payouts on the website, we post everything there, so you can see everything in real time. And so it's the markets aren't going anywhere, and neither are we, right, Rod? You and I have been in this business a very long time. We'll probably be here for a very long time going forward. So
Despite all the gray hair that grows in. Um, all right, Sean, thanks so much. Great conversation. Again, the timestamps for everything that we discussed will be down below, as well as I'll put a link to the post that Sean mentioned from his LinkedIn and any other links that will be necessary based on our conversation. So make sure you check the description below. If you haven't already, you know the drill. It really does help the YouTube algorithm. We can push out the right type of content. If you like, subscribe, and turn on the bell notifications so you're aware of times in which I will be broadcasting. I think also, Sean, we're going to put this recording on a variety of your of Tick Blaze and maybe Prop Shop and some other places, so you can look for it elsewhere on the web. And then I will have done a lead-in that will talk a little bit about a promotion that we're going to do in conjunction with the dropping of this particular video, in which we'll be doing some really great giveaways that you want to be aware of. But you do need to be a subscriber of all those different environments: Tick Blaze, Prop Shop, and NeuroStreet probably, and then also here, of course, on the Futures Fanatic. But I'll explain all that in a separate video or the lead-in. Sean, thanks for your time today. It's been a great conversation. Really good catching up.
Thanks, Rod. Appreciate you being here. Thanks everybody for giving us time out of your day. Yeah, enjoy well and trade better.